Live from Iceland, Michigan. This is pre-market prep. Starting out in the green this morning. Quiet range yesterday. UAL helping out with some good earnings. Some other not so good earnings as well. We'll bring in Red Dog Scott Redler. Hope he's feeling well at 8:35. And it's just the turn in China. Well, it's already faded from the highs. It's Tuesday. Let's get things started. Pre-market prep coming live.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, a nice or a tidy 9-point range overnight. We're in the green, 4.5 handles. The IWM doing a lot better than that. The buck maintaining this rally, holding 103, up 14 cents at 103 and a quarter. Bonds down just over half a point, 120 and 5/32. Crude in the red, 86 cents, or excuse me, 66 cents at 74.10. Both gold and silver in the green. Gold by 620 at 2028.40. Silver in the mid 22 handle, up 15 cents at 22.45. And we talk about crowded trades. Can you all guess when the ETFs came out in Bitcoin? You can look at that chart and see it's been a straight down move since that. Let's bring in Triple D. Triple D, you're getting some cuts and bruises this morning, but as always, you're prepared for battle.
Prepared for battle. Definitely some cuts and bruises here this morning on the wrong side of a few stocks here, but that goes with trading. I mean, that's how trading is. You're not going to win on every single trade. Not going to lose on every single trade. Sometimes you have more losers than winners. Sometimes more winners than losers. All depends on the day. But you keep grinding it out. That's what you do as traders here. So we're grinding today, Joel. It's a grinding type of day.
You got to get green. I'm going to talk to you at 9:50, and you're going to say, you know,
I am be green at 9:50. I might be green later on today, but it's not going to be at the open here. I'll tell you that much. Unless we have a drastic change of opening here, this is going to be an interesting open. But a few stocks murdering me, but you know that happens.
Aaron, how you feeling, buddy? How you doing?
We're feeling a lot. We're feeling a lot better this morning, Joel. As you can tell, the voice is still coming back, but everything else, good to go. Good to be back on. Good morning to everyone out there joining us today. Not a lot this morning in terms of economic data, but we do have a lot of companies reporting earnings this week, Joel. Let's start with some of the more, I guess, let's get the bad news out of the way first. 3M, Triple M, down big. Probably down bigger than Triple M is probably down more than Triple D right now, but it's around 7% getting crushed right now. I mean, this one, Triple M has just had so much lawsuit worries over the past few years. EPS came in at 935 versus 982 estimate, and non-GAAP EPS beat. But hey, look, traders are still selling this off this morning. I don't know how you can be buying 3M here. We were talking about it before. Dennis basically made the point. Look, if you don't have an AI story, traders don't want it right now.
Yeah. I mean, this is where we're at, is like certain stocks are getting a pass, but for the most part, this is AI. The dips, if you're looking at like what dips are getting bought, and people are like, oh, I'm all over the Boeing dip. You know, well, that continued to dip. I'm all over, you know, the Archer Daniels Midland, great company, you know, $58. Well, it's down to 52. The dips continue here. I mean, it seems like the dips that are getting bought are on the technology stocks. And if they're not technology stocks and they're dipping, they're just forgotten and not cared about whatsoever. So you got to be careful with which dips you're buying. Example, let's go to Microchip here. They come out 4 days ago and warned. And the stock was trading down under $80 in the pre-market. I actually think it got down to about $77 or $78 after hours on that warning. Never even came close to those levels, so you won't see that on the chart, because in the regular session, we opened up at 84, went down to 81.72, and then we bounced. Now we look at it, It's up $7 from where it gave the earnings warning here. So 4 days ago. So they come out, they warn, and it doesn't even matter because they got the AI story attached to it, and people are just so hungry for anything AI that when you get the dip on a potential AI stock, microchip, they're all over it.
All right, let's look at the Triple M. I mean, I looked at the ADM yesterday. That was a little bit different because you had the CEO getting booting, accounting issues. I mean, things that you definitely don't want to have on your plate when you own a stock. The Triple M trading down in the pre-market. They beat lower guidance here. I'd maybe attempt to buy the dip if I was short here. Look at that $100 level. You hit 100 twice in December. Haven't in there. So see if you can hold above the pre-market low. The pre-market low is just under that at 99.80 is the pre-market low. Did that twice on the 15-minute bracket. Optionality, the straddle probably was not that huge in it. So you can look at the price of that straddle and find that as theoretical support. For something like ADM, you got blown out of the water yesterday on that. If you no way, or I can't say no way, but the bottom of yesterday's range, that's going to be resistance for quite some time at 107.40.
Yeah, and I mentioned the lawsuits with this company, and people have been talking about that as one of the big negative catalysts. Of course, the earplug, multi-billion-dollar lawsuit for 3M. But it's starting to look like on the chart that there's some other things going on too, besides just this lawsuit. That there might, just be some more overall growth concerns for the company. But speaking of growth,
we've talked about the lawsuit, the earplug lawsuit here, and I would argue that 3M would be $100 higher if it wasn't for this lawsuit, AB. That's how big it is. This lawsuit is still an unknown. When they think they're going to settle it, that one day they thought they're going to settle it, pop 10% on the news, and then,
Yep.
it's not settled. Until they can get clarity on whether this is going to get settled or not settled. I mean, some people have said this company is going to be bankrupt, that they actually can't even, if the judge, comes and rules, as much as they did in that single case there, which obviously they fought, the company wouldn't have the money to do it. So, I mean, it's significant. This definitely is holding the stock back. But then the other thing we're talking about, what's the AI story in 3M? What's the cool story that makes me have to go buy 3M today? What is it? I don't know. I don't think there is one. So that's why this is not the dips you're looking for, as Yoda would put.
Well, yeah, 3M with the growth concerns. Speaking of growth concerns, China has been, one of the big stories so far, 2024. A lot of economic uncertainty there. Really, all the big Chinese names have just been getting crushed to start the year, not participating in the rally whatsoever, whether you're looking at Baidu, JD, Baba, you name it. Overnight, China announced a stock market rescue package. 200 and about $40 billion. You saw a pop on some of these Chinese names when it was announced. But as you mentioned, Joel, that pop is starting to fade already. And I always, the news is one thing, the package, I'll have to go through and see exactly what it'll mean for the Chinese stock market. But I'm more concerned with the reaction than the actual news itself. And the reaction is telling you that, hey, some investors might have been excited about it right when it's announced, but it's not like the catalyst that's going to drive these stocks up 5+% today. What are we seeing?
And that's what everybody thought last night. I mean, Twitter was just littered with all these people who have been trying to buy the bottom in the FXI for months unsuccessfully. And they're coming out saying, this is it. Now China's behind. China's been trying to prop up their markets here for a while. Nothing has worked over there. So we get the overnight rally. Hang Seng's up 3 or 4% last night. Obviously not up nearly as much now because we can look at the FXI trading up only 2% here. And this rally is already starting to fizzle to a certain extent. Alibaba's trading up. Obviously it's the first one you think about, up 2.99%. It's a nice day. Is there value here? Yeah, there's value. We've talked about that before. Take away the geopolitical risk, and I would be overweight China right now, but I own 0 China stocks. I can't quantify that geopolitical risk. So I just stay away, greener pastures somewhere else. Baba, I don't know. Like, part of me wants to buy it here because this is just ridiculously low valuation for Alibaba. But then, it was ridiculously low at 90 and 80. And now it's 68, now bouncing to 70 here today. It's like the stock is so hated that, and obviously the geopolitical risk is the reason, that it's just cannot continue a bid. It gets one bid for one day. Sellers come in, bag holders come in. There's so many bag holders here. Is it a crowded short? I don't think that many people are short these China stocks. I think there's just people just not interested in them. So we come right back to with the geopolitical risk, people aren't interested. And, is there an AI story? Yeah, maybe on some of these names, maybe Pinduoduo, maybe there is. But I just think, again, it's been so much easier elsewhere. Why try to be a hero and call the bottom in China?
Compliments of Bloomberg here, showing their market rescue steps failed to reverse the slide in 2015. That's when the Chinese Securities Finance Corp spent 1.5 trillion yuan buying stocks. So I don't know how that equates to the size of this package, but you can see what happened. Over the course of time with the Chinese markets. The thing, and I mentioned this to Dennis. I mean, where's this money coming from? When I see this kind of news, I'm like, well, where's the money? The money's coming from somewhere, right? Is it coming out of the U.S. equity markets? No, doesn't look like that. Is it maybe coming out of our bond market? I don't know. Or are they just going into the till and just printing some more? So,
Yeah, but again, we can talk, but China is in a completely different situation than North America. They've got a pile of money over there, communist country. So where does it come from? They have so much money, Joel. The Chinese government, if they want to come in and support their markets and start dumping money into the markets here, they have so much money where we got 35 trillion in debt. They got to serve, they're not sitting here and with all this debt hanging over them. I mean, and that's the communist way is like, obviously you're basically robbing from your citizens to build government wealth. Well, the government is very, very, very wealthy over there. So can they get behind their markets with $278 billion? That's the equivalent of the 2 trillion yuan. I mean, that's a drop in the bucket for Xi and China and the Chinese government. So if China decides to come in here and start propping up their markets and buying their stocks, it could be the bottom. It could be the bottom. I just been fooled so many times. I'm like, do I want to take the chance that this time it's different?
well,
I don't
Baba's
know.
moving. Well,
I
I
wouldn't be
guess
short any of this though. I'm not. It's not
holy
like, oh yeah,
macro,
Baba's
Dennis.
up, let's short. And we're popping here again. Here, Baba got news right now. We're
Yeah.
popping right now. There's more news happening here right now.
Let's see,
Something
I'm
else.
pulling up. I'm pulling up Baba and Benzinga Pro to find some news. But yeah, I would say that would just be kind of like the
Baba just popped $2
Holy
right now.
cow! It's up 5% right now.
Something happened with Baba.
Yeah, they heard us talking about it. No, but
maybe.
I
Could be
know.
the bottom, and all of a sudden the algos go nuts.
I think
Dennis Dick said it could be the bottom.
I think the flip side. I think like if you
I also said I wouldn't invest in it.
I think if you were bullish, if you were bullish or wanted to get bullish these Chinese names, or maybe you had bought these stocks recently, that is, I guess, what my argument would just be that a lot of the fears have been, Xi's government is anti.
I've got the news too on Baba, just to interrupt you, Aaron.
Yeah, go ahead.
The news is being reported here from, I'm trying to grab where it's from. I don't even know where it's from. But the news is that Jack Ma has been buying shares of Alibaba. New York Times, I believe, reporting this.
Wow.
New York Times reporting that Jack Ma has been buying more shares in Alibaba in recent months. So that is your news for Alibaba, just breaking here. I believe it's the New York Times. I didn't go look at the New York Times, but that's what they're talking about. So I believe it's New York Times.
So he's allowed to go to a payphone from where he's at and then make a phone call to his broker.
You're from jail? He's not in jail anymore. Jack Ma is not only alive, folks. Here's the news on Alibaba. He's not only alive, he's actually buying more shares in Alibaba. So the algos are going absolutely berserk.
Holy cow.
Just rallied $3 more here right now. Only live on Benzinga's pre-market prep do you give you these kind of moves here. We started talking about this thing 2 minutes ago at 70. Oh my gosh, it's $73. Again, I was not bullish. I was just saying the facts that I'm not shorting. I'm not staying away. I'm just staying away, not touching it. I'm even scared to day trade these things because it just seems like the overnight news. You just don't know how it is. But Alibaba, big pop here. Jack Ma, hot for his stock.
Yeah, I mean,
Go ahead, Aaron. I'm sorry.
No, I was just gonna say, I mean, the move right now you're seeing is crazy, and my point earlier is I was gonna say U.S. investors have been talking about how business the government of China is and all this, but when you see a move like this, like the stock market rescue package, that makes me think, okay, maybe Xi's starting to see some of the economic turmoil in China from some of the policies and starting to kind of walk that back. You saw that last year at one point when him and Biden were talking, and people were like, oh, maybe they're starting to get a little bit more business friendly here. So maybe that could be some sort of catalyst in the long term. People just saying, okay, the stock market package, they're doing some things to try to help their companies. Not sure if it's going to work. Clearly, it didn't look like it was working, but now that you got Jack Ma buying and the $270 billion coming in at the same time, you should be getting a pop there. So Baba, again, is getting that pop now at 73.50.
This is as good a news as you can get. China propping up their stocks and Jack Ma buying Alibaba stock.
Right.
I mean, it should be up significantly here, and it is. The question is, can it hold? Bag holder central, that is Alibaba, and there's no stock that's more bag holder central out there because we've been in a rip-roaring bull market, and this stock made a new 52-week low yesterday. Not even new 52-week low, multi-year low here. You're like, well, actually, 2022 got lower, got down to $58. But, I mean, value is there. Jack Ma thinks value is there. Dennis Dick thinks value is there. But I stay away because I don't understand the geopolitical risk. The only reason. If there was no geopolitical risk, Alibaba would maybe be the biggest position of my long-term portfolio, but I cannot quantify that risk, so therefore I don't touch it.
Do you think that the New York Times algorithm tapped into Benzinga's pre-market prep show? And then when we started to talk about Baba,
and they let it go. Let this news go.
Yeah. I mean, it probably wasn't even
Joel,
like
you're
a
funny.
real person. It was like an algo that like picked it up. And when we were talking, and I was just going to say, I don't know if anybody's trading this stock from the long side, but I did notice a pair of highs here, splitting to 73, 30 area. So I wish I would have gotten that out there if you're looking for a short-term trade, because there was a pair of highs in that area just from the 11th and 12th. And then that next high is 74. But I don't even know if you're going to get another look at that 73.50 area. But
and it's going to be choppy today, so it can go anywhere. This news is just digesting. CNBC hasn't even reported it yet. Remember, you often get the CNBC pop 10 minutes after the news because they report stuff 10 minutes after it happens. So I haven't seen it on CNBC yet, so sometimes that can get a pop there too. So I would say it's very premature to say the high is in an Alibaba here.
Yeah, we'll continue to follow that as the morning goes on. But moving on from China, we will see some other big earnings reports throughout the rest of the week from U.S. companies. Today, after the close, good old Netflix, ticker NFLX, set to report. We had some news on Netflix this morning, too, that Netflix is getting in. They've teased that they're getting into the live sports, live entertainment game. They announced that they did acquire the rights for WWE's Raw. I don't know about you guys. I'm not a huge wrestling guy, so I don't know how big of a catalyst this is. I do think live sports in general will be a big catalyst for Netflix, and I will tell you why. But I'm curious, before we get into that, how big of a catalyst is WWE?
There's some hardcore fans. I used to be a hardcore wrestling fan when I was a kid, but then somebody told me it was fake. Just kidding. No. I think it's a good get. I think it's this is what Netflix has to do, continue to get content. This is what they're good at, is getting new content. So there is a lot of people who really enjoy watching wrestling still. And I think it's good news for Netflix. Multiple headlines here though.
Yeah.
Interesting enough, Joel. Last night was reported that Netflix was losing their chief film.
Yeah, he's going to start his own company in March. But I feel like it with these big entertainment companies, the studios, which now that's what Netflix is it's basically competing with, MGM Studios, all these other filmmakers out there in Hollywood. You see those executives shuffle around all the time, going from one place to another. So I wasn't sure how huge of a catalyst that was for Netflix, but trading slightly higher. I mean, 1.5%, $7 coming in the morning. I mean, we haven't really seen Netflix participate as much with the rest of the tech market. Netflix is down over 1% in the last month. You compare that to the Qs, you compare that to all the chip stocks, your AMDs, your NVIDIAs. Obviously, Netflix is part of that. Netflix is in the Magnificent Seven, right? Yeah.
No,
it's not.
Never did. It's the one on deck to potentially be put in if they lose Tesla. And did you see last night Kramer officially kicking Tesla out of the Magnificent Seven? He must listen to her tweets and watch her show because I kicked it out a week ago. But Kramer's coming on now and saying if they miss earnings tonight, he's kicking it out of the Magnificent Seven. So it all depends on the earnings tonight.
I mean,
So
look, you got it. If you want to be the Magnificent Seven, you got to be magnificent. And Tesla hasn't been.
Now, that's been my argument. So again, I tweeted this out a week ago that I'd be kicking Tesla out of the Magnificent Seven, but Kramer, they're a week behind us there, so he's kicking it out there too. Netflix, this is all noise. So this is all noise.
Earnings.
The chief film, editor or whatever it is, the chief film guy leaving last night, stock falls $5. Now they get the WWE deal, stock rallies $20 from those lows. It's all noise ahead of it though, because what's going to matter here is the earnings tonight.
Mm-hmm.
They got to beat. The stock is up substantially in the last 2 months. You could say, oh, well, it's kind of just been going flatline for a month, so maybe expectations aren't that high. But I think they are. And I don't really know what the AI story here is. Maybe there's an AI story eventually somehow figures it out. But I think you got to beat. If you don't have an AI story, you got to beat your numbers. So Netflix is going to need to beat, and the subscriber numbers are going to need to be good for the stock to break out over 500.
Well, they also have the different tiers, the advertising tier, and I know that they were looking to pick up some increased earnings from that. I would say that it's great news that it's up just under $8 here at $493.50. But you may be lamenting the fact that when it popped over $500, got to 502.96 on that news, and now you faded $10 off the high. So if you won't let me say that the high of the day is in Baba, then I'm going to say the high of the day is in Netflix.
Well, that's a bold call too when they have you're talking the intraday high because they have earnings tonight, Joel. So
intraday high. 4 o'clock.
He's saying 4 o'clock. He closes out. Well, I don't close till 8 o'clock. So the high of the day is going to be determined here after hours on this earnings report here. Let's go to the options chain and just look at what the straddle is trading for here. So if we go to this week's expiration here, January the 26th, looking at current stock price. Well, 485 was a close. What do you think it is?
50, 60?
Oh, that's a big number, Joel. I wouldn't have guessed that high, but you're not too far off. It's about $40. Okay. So $39.15 if you went with the closing prices on the 485. But let's just round it, say $39. It's $39 a straddle. So what they're saying, that's what they believe. That's expected move is 39 points up from the 485 close. So that would put us up 40 points to 5. What's our air math here? Joel, you're good at the air math. 525.
Good quarter.
And then the low end 445. Well, you can see that low end they're looking at the 445. That's the little low on June the 12th. Sorry, December the 12th. So that one, or is it December the 6th? December the 6th. I'm getting my dates. This platform screws me up. This one charting platform. They put the day and then the month. I want the month and the day because I read it backwards. I'm like, who does that? I need to fix this.
What platform?
I don't want to call them out and give them a shout out because I've been friends with the owner there for a long time. And I use it's a smaller company there. But,
okay, I know who it is.
Yeah.
But you've seen that with Netflix in the past before, where it's had these huge moves off earnings. I mean, you go back to its first report in 2022, and the stock dropped 30%, and then it happened in consecutive quarters. If I had to pick a side, I mean, you mentioned that move is it's a big expected move, and the options themselves are going to be really expensive, Dennis. But if I had to pick one side to play it, I would go the short side because I think the company would need to put out a crazy beat for it to go up a lot at this point. Now that it's already, I mean, you're talking about, Netflix is up more than 150% from its lows like a year and a half ago. So you've already seen this huge move to the upside. And again, you've seen the stock get crushed on any sort of bad report. So again, if I had to pick a side, too expensive for me to play, too rich for my liking. But if I had to pick a side, I would be playing it to the downside, not financially.
Yeah. So then you're just looking at the $20 if you're buying puts. Obviously, if you're not playing it both ways, you're looking at $20. So 465 would be your break even at the four. Well, that was at the close. It's 493 now. So obviously the options market is not open yet, so we can't give you adjusted options prices because they don't open until 9:30. So all we can do is go off the closing print. But it's $20 from where the stock is trading down. That's what they're looking on the puts.
Aaron, we just talked about the straddle. I know that you're pretty active in the options markets, and I just wanted to make sure that when we talk about the straddle and the expected move, that you fully
Aaron
understand
knows.
that.
You can
Aaron,
explain it to our listeners, though, if you want. Aaron knows that stuff, but you can explain it to our listeners.
It just gives you, theoretical support and resistance, based on the option market makers, and I'd say they get it right a lot more times than they get it wrong. So it's targets a lot of times when those targets in either direction are exceeded. The market makers come in and either have to like readjust their positions or just reinforce it. But it's a good tool. But Aaron, I just want to add, you usually play the options outright, correct? You're not like
Yeah,
you don't look at
I
straddles.
don't like doing a lot of spreads, strangles, because again, the way I trade options, I do it more just for fun. And I'm like, oh, if I think this company's gonna
Directional.
beat and go way up, I want to buy calls. I don't want to get in my way of my profits by then hedging it. But yeah, I mean, like when Netflix reported, and I forget the exact quarter, but I mean when it was down 30%, obviously that was more than double the expected move. So if you were holding puts, you make so much money. But then after that report, then they start pricing in, okay, then the expected move for this stock's going to be even higher. This is proven to be volatile after reports. So then the next time coming around, those options are going to be even more expensive. So I, a lot of times on earnings, try to find stocks that people aren't expecting the big moves in, as opposed to the ones where, again, already that big move is priced in. And again, because just those contracts are so pricey that if you're wrong going into earnings on options, you're going to get crushed.
It's
But if you're buying the expensive ones and you're wrong and you're only playing one side, then you're getting crushed bad,
it
So
is very, very difficult to make money in the long run buying options. It's a lot more money being made selling options. My buddy
Mhm.
Chris has been an option seller for the better part of a decade, just a net option seller every single month, and slowly brings in premium. And he gets killed every once in a while. That's the one thing when you're a net option seller, you're basically selling insurance to the market. And every once in a while, that insurance pays off. So you better have enough money in your account to take those drawdowns. But overall, option sellers' accounts typically just go up, 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 make like 95% of the time. Then they have a big drawdown. Then it's up, 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 and then it's a drawdown. I mean, if you're a market maker and you're hedging and you're doing different things, but if you're just selling options, it's saying you're not a hedger. You're just selling puts and calls all the time into the market here, not hedging yourself out with the stock or hedging yourself out with other options there. And there's lots of different ways to do it. Overall, your P&L will track like that, up, 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 and down. And the opposite occurs if you're a net options buyer. It's a slow deterioration, then you get a win. And then slow deterioration, then you get a win. And slow deterioration, you get a win. And overall, though, your P&L will track down. So overall, options premium, just the decay is what eats away that strategy here. It's hard to make money being a net options buyer.
yeah, and I mean, I see Paul in the chat saying that AB is a gambler. I don't disagree with you. And again, what I do with my options is a completely different portfolio. I'm more of a long-term investor in my portfolio. That's just something I do for fun on the side. But I do it when I have theses and theories. And if you're going to say that, then you'd be saying Michael Burry was just a gambler, which again, some people would say that. But if you have a theory, if you've got a thesis and it plays out, you look at the Roaring Kitty guy. I mean, he was gambling too in a way, but he's got a story. So I agree, but I also disagree to a certain
There are
degree.
times to be option buyers. And Joel, I
Volatility.
rarely buy options, but let's take us back to COVID. And we talked about this. Me and you were convinced. We were watching social media, and Chris Camilo, same thing. I watch social media, and you can make, there are trades you can make off social media to get ahead of it. And we knew COVID was coming. Take us back. You listen to the shows from January 2020. We're like, this is coming, folks. This is coming. We were warning you 2 months in advance. And we bought all those puts on all the airlines, all the puts on my portfolio. I went out to February and I didn't go out far enough. And the whole first tier, I've told this
Yep.
story before, expired worthless. And I was so pissed off because I'm like, this is coming. And the market is just ignoring it. I'm like, how are they ignoring it? I'm like, this is going to come and just smoke the markets. So then I got ticked off and I went all the way out to June. And when I went out to June, all those options, I bought SPY puts I was paying $5 for. Some of those SPY puts I took off for $50. So I mean, that's what saved my portfolio. And I was more hedging my portfolio. I didn't want to lose a lot of money. I really anticipated big falls coming from COVID, which did happen. March was like, how many months we fell 30% in March of 2020. The overall market. That's a crash. We crashed in March of 2020. So there are times, AB, when you can clearly see the market ignoring obvious risk, that there are times to buy options. And we kept talking about how cheap premiums were then because the markets were at all-time highs. And everybody's like, oh, it's COVID, it's over in Asia, it's the thing. It was coming. We knew, you could feel it was coming. You knew when they're spraying the air over in China that something was coming, and it was obvious. So that was a time, one of the few times that I actually went out and basically hedged the majority of my long-term portfolio by buying puts. But if you're just sitting here, going to hedge every single month buying puts, I mean, you're slowly eat away your long-term performance. The long-term performance of the market is 8% a year. And if you add up where the market's trading, just do the exercise, and it's a fun exercise to do, but let's just go look out. Just curiosity killed the cat. Sorry, I'm still dying from this bloody flu. Day 20 here. SPY. Let's go to the options chain and go 1 year from now. I'm just curious what the market makers are saying, because I'm saying the long-term performance, 8%. So if we go out to, I'm just grabbing the options chain here. Oh my God, there's so many options here. Let's go out to January 2025. Let's go 1 year out. So January 2025, we'll go to the 480 puts, because 483, well, we're 484. Anyways, there's 480s and 485s. There's no 483s because they're a year out. So we got to go to the 480. 480 is $20, $21, which is 3 points out of the money. So you lose another 3. So that would be 24 points. It's got to go down to break even. Well, 24 points on 48, that's 5%. So it's not as bad. So if you're hedging out a full year, it's going to cost you 5% of your gains to hedge that out. But I mean, an 8% long term. So maybe you own stocks and maybe you buy puts and you pick up 3%. But then there's the risk-free rate and the cost of capital. So that's all be included in there too. So, I mean, it's just saying the long-term proposition for hedging your portfolio continuously is not there. If you think there's something coming, you can time it right. You can save yourself a lot of money or potentially just make a lot of money if you're buying a lot of puts. But if you're just sitting here hedging every month, it eats away any long-term performance you're going to get on your long-term
And the time
portfolio.
value of money was so much lower back then too. Right?
Yes.
Now, if you would have had a 5%, 5-6% cash alternative at that point, maybe, you would have. I
think I went out 4 or 5 months. I mean, again, the SPY was only like 330 then, so it was lower. I think I only paid $5 or $6 for those puts going out that far. And I remember saying it on the shows. I'm like, insurance is so cheap right now. The VIX was like 12. It was so cheap back in like January of 2020. Insurance was just super cheap. And you bought puts too, Joel.
Yeah.
I mean,
yep.
And those puts really help. And again, my long-term portfolio still got crushed, but I had puts offsetting it, which really helped in that March. Now, what I did wrong was probably, I covered the puts in, but I probably, just didn't be loading up and buying stocks. We know 6 months later, the markets really took off and COVID turned out.
It was hard to buy stocks then. Cause I mean, you would look at a company to be up after the initial crash, and you'd be like, well, they're not even open right now. They're, it'd be like
really hard.
A company's factories and production would be shut down. They wouldn't be producing whatever goods they were selling, and yet their stock would be up. You'd be looking at like Dick's Sporting Goods, and their stores would all be closed. And then all of a sudden the stocks are up. And I guess that's not a good example because people would just go online and buy their stuff there. But either way, there were companies that were actually getting fundamentally hit by COVID. Yet their stocks were still going up. So it was hard to be a buyer then, which is, I think how it usually is the best times to buy are when it feels really bad and you're not feeling great. I mean, you look at, January 20 or in 2022, just when the market was getting crushed. In hindsight, you've been best buying Nvidia down at. I mean, what did Nvidia even get to?
Under $100, I think. AB. Like
looking back on this,
$100.
Looking back on this, who wanted to own Nvidia when
108?
When
got
interest
down to
rates
108 in 2022.
When interest rates were going higher, growth was out of favor, big tech was getting crushed,
and nobody's talking about AI yet.
No one was talking about AI. Well, besides Kathy Wood, you got to give Kathy some credit sometimes. She's been talking about that trade for a while.
She just played it all wrong and bought all the wrong stocks.
Which also, I was thinking about that. I finally got around to watching the GameStop thing on Netflix. We were just talking about Netflix the other night. And the Melvin guy, like, looking back on it, like, he was right about GameStop being overvalued. He just played it wrong and got.
Timing wrong.
Yeah, that's it. Yep.
It's like
And,
you can be right all you want, but if you're not, trading it the right way, it not going to help you. But either way, point with Nvidia on the way down here, no one wanted to touch it, no one wanted to own it, and now, of course, with hindsight, looking back on it, I'd be, you'd be begging. You're never going to see Nvidia down at $100 ever again. I'm very confident saying that. So,
I don't think so either. And let's bring Red Dog in here. Red Dog's in the background. We got to get Red Dog in here, and we can bring in the conversation. We can start him with Nvidia and go into this conversation here because we're gonna get his thoughts too. But let's bring Red Dog in.
What up, guys?
How you doing? CSO of T3 Live and T3 Trading Group. And how you feeling, Scott? I mean, here we have. I had a little cold a couple of weeks ago. Triple D has the flu from hell. Aaron, we don't know if he's sick because he just cheered his ass off at the Lions game. But I saw over the weekend, man, and jumping in that ice. I mean, come on, how you feeling?
To be honest, I don't feel 100%, but I feel okay. About a year and a half ago, the same thing happened to me. I'm a high fever runner. I had like 101. I'm like, you know what? I'm not gonna dress up in 4 sweatshirts. I'm not going to take a shot of whiskey and do the old wives' tale cocktail. I'm like, I'm going to go in my sauna, sweat out whatever is bad. I'm going to go in my ice barrel constricted. I'm going to go in my sauna again, and then I'm going to drink gallons of water, vitamin C, and this and that. And I did that on Sunday. I actually documented it. People thought I was nuts, which it's fine. I'm a little nuts. I get it. You have to be a little nuts to be trading the market for 25 years and responding to people's Twitter and giving advice to everyone, trying to be safe and sound and keep everyone moving forward and keep positive. That's why we're all a little nuts, but nutty's good, right? Anyway, with that said, I didn't have temperature yesterday, and I came in. I have an open house this week. I'm like, you know what? I got to come in. I don't have temperature today. I'm feeling a little less congested. I did take some NyQuil last night, which I haven't taken any medicine. And that was the worst thing I did because I woke up this morning, my eyes felt swollen because of the NyQuil. And now I feel a little bit like myself after I just did about 40 charts and managing my positions and getting ready for the day. But sometimes it's, a little mind over matter. When you're sick, you're sick. But, there are ways to go about scenarios without just, taking pills and pills and pills and pills.
One more minute before we go into I just want to hear more about the ice bath. Like, why? What is the purpose of like going outside? What does it do for you? Because, I'm thinking about, I got all kinds of ice bath. I'm up here in Georgian Bay. I could just go sit out here in the bay here, drill a hole and jump in. So I don't even need a barrel. What is the point of the ice bath? I'm curious, Scott, why?
Well, I've been doing it for years. I've done 8 marathons. I've done 2 Ironman, and there's always been, you're sore. You go out on the bike for 5 hours. You just swam for 2 hours. You ran a marathon. You bring down your inflammation in your body by going into or putting ice on sore spots. You go to these major stadiums, or major college, campuses. They have these big tubs full of ice, and they're sitting in there. And after a big game, and it's helpful. So then you also have the Russia Banya technique where they say you can clean out your system by doing hot, cold 3 different times over a few hours, and you get out all your impurities. I've done a lot of reading, and then, I've done a lot of that. And then finally, all of a sudden, there was an ice barrel. I was 50 years old. There was an ice barrel on the beach. My friend's like, oh, we're buying that for you for your birthday. And here we are 540 days later. I haven't missed a day. Wow. It does a lot for you. I'm not going to get into the scientific stuff. All I do know is, common sense wise, with circulation is good. How do you have a heart attack? You have clogged arteries. How do you circulate? In the heat, it expands and blood goes through. And then in the ice barrel, you sit there and everything constricts. And then your body thinks it's got to fight something. And then once you're that cold, the heart pumps red blood cells everywhere to tissues that need it, circulates the blood through those arteries, clears them out. Then you sweat in the sauna. You get out your toxins and the last 10% of urea that doesn't come out through sweat or through the bathroom, and boom, you're clean. So to me, it's been working. And it's also some days it's tough. Some days you wake up in the market, you have positions, the futures are down, like, oh, can't believe I have to deal with this day. Or, hey, I'm short. We've been up for 4 days. It's a pain trade. I got to trade out of this, and you don't want to deal with the day. So for me, it's a mind game where every day I'm like, all right, let's go in there. I don't care if it's snowing, if it's negative 10 degrees. whatever it is. I'm going in that, and I'm going to continue to do it because it's a hard thing. We have to accomplish hard things in life because
Sure.
it makes a lot of the things easier.
Nobody's more committed than Scott Redler here, and I'm impressed. I'm impressed every time you tweet that out. I'm looking at that thing. I'm like, wow, it's very impressive. But I'm also impressed with your trading, Scott. You've been in this markets for a long time. You've made a lot of good calls here. How are you approaching this market? This is kind of a different market in 2024. We've had a little bit of separation. AI has kind of led the way, but we've also had, the IWM bouncing back the last few days here too. Is this, an everything rally here? Do we just kind of close our eyes and just buy here? What are your thoughts in the overall market?
Well, you never close your eyes and just buy, and all stocks definitely aren't created equal, which I know you never do. You're trying to teach and show other people that they shouldn't do that either. I listened to your guys' conversation about COVID and, and the financial crisis and how, over time, historically, the bull market wins, and how you could be right and approach things wrong. You could have a thesis, but until the market confirms it, you might not be able to stay with it. So that, that's your time frame, right? Long term, you have a 401k, you have a 529, you put monthly flows in every single month, you're going to win over time. I learned that through the financial crisis. That's how my wife's account was built from 2007 through 8. By 2012, we were at highs. So during the pandemic, when everyone's like, oh my God, the world's going to shut down, I want to take all my money out of the market. I'm like, yeah, you might do that, but then you're never going to get back in, waiting for a dip. And PS, if we've had a V bottom, and then everybody that waited for that long term, we're out of it. So long term, you always put your monthly flows in. Short term, we have to have our rules. And to me, when you're above the 8 and 21-day moving average, we've mentioned it so many times on the show, you try and be long, you try and be in a portfolio approach, you try and massage a tier system through, through the days. And as far as like NVIDIA is concerned, it's almost like what you just said too. It's like, when are you right? How many times have you tried? You know how many times NVIDIA knocked on the door of 500 and 505 in that 7-month channel?
A lot.
They put up the chart of NVIDIA. I've put it up so many different times. And, there was a lot of times that I did it and I was wrong, like put the line there. How many times? First, you can even go further back. You can go back to September, the first time I got there, and here, I'll even show you. Well, I don't need to show you mine. Yours. If you show me yours, I'll show you mine. Anyway, you know how many times it happened and how many times I actually lost. Even the last few times, like, November 20th, I tried it and I lost. I tried it again on December 19th. I tried and I lost. And one of the things I need to continue to keep teach my traders, my community, is the stock doesn't remember the last time you did it. Maybe it needed 7 months of consolidation, not 6. So finally, when you came into the week of January 5th, we were above the 8-day, above the 21-day. Market didn't know which way we were going to go, right? We were going to continue to sell off because the first week was softer with leaders lead. And then finally, boom, got above 505, hit 553, the first measured move of the top end of the channel. And then now we're, into the 600 area where the 610, 620 is the next range. But if you said, I'm not going back to NVIDIA, it owns me, or I can't do that again. You had the footsteps, same way like a quarterback gets sacked a few times and then all of a sudden he's not a good quarterback because he hears footsteps. You got to get up, you got to get going. You got to take care of your business. And I think at T3 Live, we did pretty good. I was in the stock, I was in options, played it pretty well to about 553. And then I kind of nickeled and dimed the second half of the move. And unfortunately, I could have made more money. But as a trader, you can't take out the whole move. You take out a chunk. You could always, add to your P&L monthly and quarterly. And now we'll see. Yesterday, we put a little bit of like a, a little like a doji rest day. Yesterday, the thesis was, trim some tech into strength because we were up big after 3 to 4 multiple days. And, this way you could stay with some positions. And now if NVIDIA could hold, just say 590-ish, which is yesterday's low, which is still very elevated, and hold higher, chances are 603 is not going to be the high of the week.
Boom. Yeah. And Scott, we've got a pretty busy week this week in terms of earnings. Are you planning on playing any of the companies reporting this week, whether that's Netflix or Tesla?
I love to trade options into earnings, or I trade after the print.
Ooh, my type of guy.
I have like a little, like, it's, sometimes you have a disconnect in your head. And I'm not exactly sure what the street wants for Netflix. If you punch up Netflix, you can do the chart. Or here, actually, I could even share my chart real quickly. Present. Let's see if I
go ahead.
Share screen, Netflix. You can do this 2 ways for Netflix. Like if you see here on the chart, you have 500 and you have 503. So this has also developed a channel. Last time you had you had earnings, no one was expecting anything. It closed on the lows. You gapped up. You could have played it post earnings versus that pro earnings gap. So there's 3 different ways to play stocks into earnings. One thing you never do is take it into earnings long or short if you're an active trader, because if you're wrong, you could blow up your account. You could blow up your month. One thing you can do is take options because risk is premium paid, or wait to get a gap pivot and trade versus it for a new sequence. So anyway, that's the way you can go about it, or you can trade it after hours. So going into Netflix tonight, okay, yeah, the stock hasn't been above 500 or 503. It's now been in a consolidation for almost a month, which isn't bad. It didn't participate last week, so it's not really priced for perfection. If you wanted to take an option strategy long, you could probably easily do like a 505 by 525 call spread, so at least your risk is premium paid. I would think, that would be like, cost you 4 to make, 9 or something like that, depending on how you do it. Or you wait for the print, and if it gets above and stays above 500, 503 after hours, and you're fast, you could play for an extra move. I just don't know exactly. If they're looking for net ads on their subs, I know in the last 2 years, mostly everyone put on as many subscriptions as possible, from the pandemic, between Netflix and Amazon Prime and Apple TV and Disney Plus. I would feel that in the last year, people are probably consolidating those and getting rid of some. And I know they stopped the whole password sharing scenario. So that was a big plus last quarter. I don't know if it's going to be this quarter. So to me, although it's a decent setup, I'm probably not going to take options into it just because, I don't need to burn money to be involved. I could trade it after, or I could approach it the day after like you could have done here. So to me, I'm going to watch it. I'm going to be at my desk. And if you can get above and stay above, maybe I'll play it, or I'll just wait till tomorrow and see what kind of gap we have. And as far as Tesla's been horrendous. Everyone knows that, it's like every few years you have a different stock du jour in Tesla. A year ago in May was awesome. Back here, this is when, we had a great second quarter with Tesla. From this active sequence above the 8 and 21 day, when Tesla's moving, it's awesome. And then recently, it's just been technically, it just hasn't acted well. Whether it's margins, which they've had a lower prices, whether it's them freezing in the cold weather and proving that some EVs need some work because when it's super duper cold, you don't want to be stranded on the side of the road. But anyway, if you remember this candle, I think we spoke about this the last time we were on. December 28th was the Redler reversal bearish day. And since then, it's still headed lower. So at this point, though, the only thing positive you could say is that it's all beat up going into earnings.
Yeah, that's one thing to say. Before we let you go, Scott, I just want to talk to you about your rules and your setups for Bitcoin here. I mean, big run up into the event. Everyone in the ETFs bought all the Bitcoin that day. Now we're off $10,000 from it. It's got to be down below some of your averages here. You're looking for some kind of consolidation, or is the story over in Bitcoin?
I think the story is far from over. If you look here, every day I post 30, 40 charts, and every day, I give a play-by-play, kind of like a football announcer. And I have had, for 25 years, I've had different types of rules on how to adjust if you're active. Do I think long-term Bitcoin is going to be here to stay? I do. I think if you had to accumulate 2 things, Bitcoin and Ethereum, every month in an asset allocation model, do that. If you trade actively for a living, you need your rules. You need to know what a red dog reversal is. You need to know whether or not a momentum name's above the 8 day or 21 day. You need to know whether it stays below. These are all things you have to do if you adjust a trader for a living. So if you look here at Bitcoin, I posted the chart step by step into an event. Usually they try and sell it. Sometimes they do, sometimes they can't. This is what it did into the event. He did a red dog reversal sell at 47.9. Some people are like, it's going to 55,000. Well, if it was going to go to 55,000, it would have to stay above 47.9. It didn't. That was one spot to adjust if you had too many Bitcoin actively. Then it broke the 8 day. Momentum names are special, and as an active trader, you can be long it if it's above the 8 day. It broke it at 45.5 with the bearish, igniting downward candle through the 21 days. So right there, that was another signal to reduce actively. Then it built a bear flag below the 8 day, getting rejected there, and it continued its downtrend. I'm going to look at 37.5 to 35.6. This would be an area, and that would be around the 200 day. I think for an intermediate swing, if you could, kind of time things and not get paid on that. Like I have a Coinbase account, I'll probably buy it because I might not be right, but that's a spot because I sold into there. Maybe I'll buy some. Maybe I'll buy some options in my my active account a T3 where I'll say, this is a good spot to maybe go out a month. And this would be an area of interest, right? There are areas of interest, and if that area of interest doesn't hold, then there's another area of interest. But for now, the market told you that it wasn't going to 55,000 once all the ETFs were created. It was a noisy trade, and now you'll see what happens into this 35.5, 37.5 area. So at least you kind of have things mapped out. So when it gets there and everyone's super duper negative, you could have you don't have to have an opinion on the negativity, but where it's actually at to see if there's an opportunity.
Very consistent with the way you played the NVIDIA, right? You're doing the exact same. You tried to break out, it didn't work. You tried to break out, it didn't work. Here, a little bit different. You're trying to buy on weakness. It doesn't work. You don't get killed. You don't add to a losing position. You reload. That's great. Great market mechanics coming from Scott, Red Dog Redler, CSO of T3 Live and T3 Trading Group. Really appreciate you joining us. Feel better there. I still got to get you in the pool. Work on your stroke for those triathlons that you do. If I do a triathlon, I can do the swim part, I can do the bike part, but can you get in a car and do the running part for the marathon? Because I don't think I can run 26 miles.
You could just get a teammate that can keep you company and do it. It's called the relay.
Okay. Thanks a lot, Scott. We really appreciate you coming on.
All right. Thanks for having me. Have a great day, guys.
You as well. Guys, we do have a link in the description if you want to go check out Scott's room. It's free for the rest of the week, so if you want to go check that out, see more of Scott's charts and trades, make sure to do that. Again, in the description, I'll drop that link in the chat as well. All right,
that guy just conquers life. He's all over everything. Health, trading. That guy is awesome. I want to be more like Scott Redler. I gotta go just start jumping in the ice bay.
Don't, Dennis. Don't jump in the bay.
You're gonna have a heart attack your first day. Yeah, don't do it. You gotta build yourself up to that.
Barrel. I'll buy you a barrel, and
I was gonna go jump in the ice bay. I'm gonna dig a hole. I don't need a barrel. I got what I got out here. I got the whole thing. It's all ice. I'd have to drill down quite a ways to get to the water though now, because it's gonna be more than 6 inches to drill down through. So. Anyways, lots of places to go. Love you, Scott.
How are we looking on Baba? Is Baba coming back up at all? Are we getting?
Yeah, it is. I'm not going to bite my tongue yet here. The Bobster back up right near the highs of the session, right back to that area 70. This is the area of a couple highs here. Another daily high at 74. So Jack probably put another dime in that payphone there and is buying some more. Let's see if that's helping.
He only gets one call a day.
We've also got we haven't looked at either Apple or Microsoft this morning. No specific news in either stocks, but biggest companies in the market. Apple now looks like getting some, a lot of love the past few days, up more than 6% throughout the last week on Apple, which again, I just think is significant coming into this new release of the product. We've talked a lot about the headset the past couple of weeks.
Yeah.
Dennis is bullish. Looks like the market is starting.
I think the Vision Pro is just a game-changing product. So I wish I honestly thought about rebuying it in the 180s. Just because I was like, eventually this is going to turn around here. The product, again, it is kind of bulky. I wish it was smaller. I wish it wasn't like had to wear these big goggles on. If you haven't watched the video, go watch the video of the 10 minute. It's pretty cool. The stuff it can do, I was like, wow, that's pretty cool. It's a pretty cool product.
But okay, so Dennis, you said you were thinking about buying in the 80s, didn't. Now we're at around, we'll say 194 and a half. But if this headset is as big as you expect it to be, as much of a game changer, wouldn't you still think 194 is nothing? This thing's going to go up a lot because of it.
So my long-term portfolio, I never panic and chase. And if I miss it, I miss it. I feel like this market always gives you a second chance. And the market finds ways. There'll be an earnings report, or there'll be something that'll give you a second chance here. And it's not like this is trading 20 times earnings and it's like super cheap. So, I've argued, Apple at 28, 29 times earnings and not growing earnings is a significant issue. I do think this product could be a game changer. Again, the bulkiness of it makes me not love it as much as if it was like a pair of glasses. I wish it was just, boom, Vision Pro. Now I'm trading here, just using my hands. I don't need a PC. I don't need anything. I'm just manipulating apps. I'm trading here, trading here. I could see where it's going. It's not there yet, though. We're not there yet, but I could see where it's going. So I can see lots of potential for this product. I can see like putting on your Apple Vision Pro and being in the stadium, Joel. You're in the stadium. You're not
I
have to
know,
fly across, to go to the finals. You can get a ticket right here with your Apple Vision Pro.
I know.
We'll put you in the stadium. It's going to be like way cheaper, but they could sell tickets to stay. So many different ways they could go. I should work for Apple. There's so many
Is it
ways they could go for this
waterproof?
product.
Is it waterproof?
I don't think you'll be able to swim with it on, Joel, if that's what you're asking.
You know what?
They'll do that too, Joel. Let's
Yeah.
go swim with the sharks. You want to go do some fun things. It's perfectly safe. We'll take you out here. Great white sharks all around you. You're in there and you're swimming. There's so many cool things you could do with this. There's a lot of potential, folks. Vision Pro, this is the first run. By the time they get to the third or fourth run of this thing, it's going to be less bulky. It's going to do so many more things. It's going to be a game changer in the long run.
Dana bought me these goggles that you're supposed to, like, they give you workouts and like analyze your stroke and everything, and
Really?
I couldn't figure it out. It gave me a headache, and I'm just like,
I'm scared of the headache too.
Yeah, I mean, it was just like, and you look in the side and everything, and I'm just like, and when I go to the pool, not only do I like to, to do my swim, I like to talk to people, I like to help them with their stroke, I like to give the lifeguards a hard time. I don't need these bulky things on it, but we got a couple minutes here left. We didn't get to all of our earnings stocks. GE, should we talk about GE? Does it
We
bring
haven't got
good
to
things
any
to
earnings
life?
stocks. Sure.
GE. Let's do GE.
Yeah, we only mentioned three. You had 3M. You had GE, Raytheon, or I guess it's called RTX now. This morning, were your biggest. Procter Gamble as well.
Okay, well, let's do GE. Joel wants to do GE. I'll do General Electric with you too.
Okay. Woo!
We're bouncing.
Wow.
That thing got down to how low? Who printed that down at 118? Is that right?
Yes.
Who hits GE down to 118? The stock's been in a relentless uptrend here. It feels like for the last 2 years. Am I hit that down that much? Aaron, what's this report look like?
I'm pulling it up right now in Benzinga Pro. I mean, GE, we were talking about it at the top of the show. I guess starting the show, how we're ending the show, talking about these, I guess older companies that may not have an AI play. Let's see. GE sees Q1 adjusted EPS of 60 to 65 cents for 72-cent estimates. Revenue came in at 19.4 billion, beats by 1.85 billion. So that's a pretty significant beat for GE, almost 2 billion, almost 10% there. EPS, non-GAAP EPS beat. So either way, the numbers look good. Let's see if they, stocks declines from 6 years high on disappointing guidance. So I guess similar to 3M, where the numbers themselves look good on the top line, but then, some disappointing or not amazing guidance that is then going to put some pressure on the stock.
I think the low of the day is safely in on this one here, Joel. I don't think it's being down to 118, 119. Pre-market traders have bought the dip here already. It's a love stock. The guidance was light. Trade's over here, folks. It was the dip, when it's down $12. I don't think there's a trade
down
here. It kind of feels like where it should be now. That was just complete overshoot this morning.
Just hit with your dailies too. I don't know if you had a chance in that kind of price action at 7 this morning, but pre-market low comes in at 118, and you had one daily low way over here. Holy mackerel! This is worth a line, an arrow up here. Look at this daily low right here. That comes in at 118.17. Another pair of lows just above that at even at 118.50. But now traded down 293. That's a $10 rally. I mean, if you get back up to, I call 130 a good number on the upside. That's another $2 away. That was also the bottom of yesterday's range at 130.26 closing price. Closing high, not all-time high, not even like a 10-year high, but a 5-year high at 131.23. I just look at this chart, and then if I was holding Netflix into the report, not quite, a big move. So when you have these big moves into the report, you really need to blow it away and say things right. So we'll see what happens with that. A lot of other news with Netflix coming out today as well.
And then,
Yeah.
so just quickly running through some of these other reports, there was so many. UAL beat last night, kind of a
we didn't do
predictable
that.
beat. The airlines have been killing it always. Seems like the airlines is continuing to kill it, but then they don't get rewarded and the rips get sold. So I'm not sure it holds is because it seems like it's the thing to sell the airline rips. Johnson Johnson's just doing nothing here. Procter Gamble up 4. PG big pop. What's the earnings report look like on that one, Aaron?
So PG was a company, this is how CNBC reported at least, that inflation was actually helping them. Basically, they're able to make a lot
They
more
passed
money.
through.
Yeah, with inflation. Let's see. Well, they reiterated a $9 billion dividend payout in 2024, which that'll help. EPS comes in at 184 versus 170 estimates. Sales at 21.4 billion versus 21.4 billion estimate. A very, very, very slight miss on sales, slight EPS beat. And then again, the dividend as well as what they talked about with inflation, basically saying that they can pass that out to the consumers.
Yeah.
But yeah, stock doing well this morning, up $4. It is 9:02, but before we
This
wrap,
is not a stock you chase, folks, up $4. But that's a big move for PG. The earnings report was fine. All kinds of resistance up here. If I was long it, I'd sell it.
I got the multiple star here for you, Dennis, at just above here at the 152.5 level. Two highs, 152.53, 152.61. Traded 155,000 shares so far. But if you think about the paper at 148, 149, 150, 151, 151.5, and 152, let's see if this thing can even open above 152.
all right, well, it is 9:03 a.m. Eastern time, about 27 minutes till the open. Joel, who do we got coming on tomorrow?
Oh, just as you were saying that, I was going to my calendar here, and
Well, here, while you're doing that, I kind of a trivia question, but I don't really know the answer, so I'm not going to say it's a trivia question, but I want to
okay.
research it. Talking about GE, you mentioned we're not even close to all-time highs. That was in 2001 or 2001, 350 a share. I don't know if that's split adjusted. What are there any other multi-billion dollar
Oh
corporations that have
yeah.
never gotten back to their '01 highs?
Oh
Oh, so many.
yeah. We
So
could be here
many.
for a half hour.
Cisco, Intel, who else you want?
So basically all those like older technology companies that
It
were
was the Four Horsemen back in 2001. They called them the Four Horsemen. And it was Cisco and Intel. Who was the others in the four? Dell, I think, was in there. I think Dell was one of the Four Horsemen. Google it. Who are the Four Horsemen? Who is the fourth one? Was it Microsoft?
Four Horsemen
Four Horsemen.
tech.
We didn't have the Magnificent Seven. We had the Four Horsemen stocks. Who are they?
Yeah,
Microsoft, Intel, Cisco, and Dell. So I did get them all. Intel never got back to the highs. Cisco never got back to the highs. Dell went off the board and killed you because it went way down and then they took it over at the low prices. So you got murdered on Dell. Microsoft was the only one. It took 15 years, but it finally did get back to those highs. So it shows when you pay 85 times earnings for something, you're asking yourself for a lot of trouble.
The financials, Citigroup, AIG, Bank of America. I mean, right there. I mean, there's some financials that came in there too.
None of those. AIG's like all-time highs, like $2,000 a share here. After the financial crisis, Aaron, half the financial stocks never even got close back to those highs.
Well,
The only ones that did were the ones that didn't dilute themselves.
So I knew that from 2007. Still, a lot of these stocks have never gotten back to their highs, Bank of America. But from 2000, that's surprising to me. I guess not on some of the older tech stocks like Dell, Intel, because people just realized, that the technology was going in a different way, and Apple, Microsoft, whatever. But it is surprising, I guess, that so many of those companies, I mean, you look at how many different times, whether it was pre-COVID or in 2015, that we've been hitting new all-time highs in the stock market. They haven't even been able to get close to back to their 01 levels. I mean, again, that's interesting, but I obviously wasn't active in the markets when I was, in kindergarten. So
really,
why not?
Yeah. I bet you. Were you one of those kids that in high school that could text with their phone in the pocket?
Yes. Yes. How'd you know?
Yeah.
How'd you know?
That is talent there. That is absolute talent.
Well,
okay, we're gonna talk more options tomorrow with CC Legator.
Whoa, awesome! Love the options talk. Great show, guys. Today again this afternoon you'll have Netflix. Tomorrow afternoon, big day with Tesla reporting. So make sure to come back, tune into Benzinga's pre-market prep. Till then, Make sure to smash the like, subscribe to the channel, and stay green.